Don says, does PowerOptions software allow for inputting our trading goals and then produce the output of possible trades? Well, in a sense, Don, that's what the search tools do. Let me explain that. So Don's saying he needs a trading plan for something along the lines of he wants to do a covered call and wants to make a minimum of 2% return. All right, let's just say what I did, every 2% return every 14 days or so, or under 14 days if possible, while still having a 1.5% downside protection. But maybe he also wants to be 2% of the money on good long-term bullish trending stocks. Okay, so what I'm going to do, I'm going to go in a covered call and I'm going to go to search. We're going to talk about other strategies too, not just covered calls. Here we're looking at a default search, and we have many default searches and many searches we've created during webinars, for example. We're going to create another one today. But you have the monthly and weekly picks of the day, in the money covered calls, at the money covered calls, and so forth, stepping stones for you to use. But let's say I have a specific, like the Microsoft. Don has a specific trading plan for covered calls. This doesn't mean it's his plan, but we want to trade bullish stocks, pay at least a 2% dividend per year. We want to be 3% out of the money, trading 7 to 14 days out and getting a 1.5 to 2% max return if assigned with still a 1% downside protection. That's his trading plan. Does PowerOptions allow you to put in these inputs so you can see it? Yes, but we just have to translate them, Don, into what the criteria are. Here down below are all the filters we're using for this default search. Let's go ahead and clear filters. I'm going to set all expirations, but we're going to go 5 to 15 days out in time, my 1 to 2 week out in time range. I want a percent if assigned of at least 2%, let's say 2.5%, and I want a downside protection of at least 1%. 1 week out or 2 weeks out, it doesn't matter. But I also want to be 3% out of the money or more, because I'm hoping not to get assigned and enhance the dividend stocks with extra premium, hoping 3% out of the money is enough for a 5 to 7 day period. I could set this to 5 as well. We're going to start with 3. I don't need to worry about much else. Maybe I'd limit the bid-ask spread to be less than 50%. I don't want something too wide. I could look for a certain volume today, at least greater than 10 contracts, and an open interest 100. That's fine. The focus of this little covered call scenario we're talking about, which remember is not exactly Don's, and I'm not saying this is a really great approach. Okay, I haven't tested it, but I'm just saying that you have a trading plan, just translate it to what the filters are. So I can go into technicals now and I can say, yeah, I want a stock that's trading above the 50-day or 20-day moving average. Since I'm going 1 to 2 weeks out, I'm going to use the SMA 20. Yeah, average stock volume, we're going to at least want 1 million shares. This one is measured in thousands. If you hover over the link, you can see directly the definition here. So this is measured in thousands. So I'm looking for an average stock volume over the last 90 days of at least 1 million shares. I could use MACD and Bollinger Band, but I'm not going to do that right now because the market's been weak. So let's go to fundamentals. Well, stock price is relatively important in this case. We like to see some good stocks, but depending on your account size, I might not be trading a $700 or $800 stock that pays a dividend right now. I might be looking for 5 to 85. That's going to narrow my window. There's a lot of stocks we saw with Microsoft now 304. Let's do 40. So 400. Might miss out on Kraft or some other positions in the 30s there, but that's okay. We wanted a dividend of at least 2%. I might want to be growth stocks, these stocks that have at least grown their earnings at least 5% or more. That's a common one that you see in all of Ernie's and my covered call and naked put default screens. And let's just say I want to avoid earnings between now and expiration. Now that was about 4.5, 5 minutes. Seemed complex, but what did we do? We just entered in basic criteria. I want to be a certain time frame out in time. I want a minimum percent if assigned for my trading plan and a minimum downside protection. I want to be out of the money hoping it expires worthless. Wanted some relative volume. I want an uptrend, good average volume for the stock, my preferred price range, and I was looking for dividend stocks. And I wanted to see something with growth, and I'm going to avoid earnings between now and expiration. That's and nothing's there. Okay, why is nothing there? Well, let me take out the earnings first, see if some of these big stocks still have earnings between now and expiration. I highly doubt it. A lot of them have already gone through, but there might be some. Okay, And I'm too far out of the money, I bet. Or, sorry, let's just move that to 0. This is the problem with dividend paying stocks, okay? So nothing matched. So let me go 1% out of the money with at least that 1% downside protection. There we go. BK, Bank of New York. WBA, Merck, American International. It seems low, but again, it's because a dividend paying stock that's, that far out in time, you're not seeing that many that offer the percentage return that I was looking for because they're lower volatility with still offering at least a 1% downside protection. Some of these are pretty deep out of the money. The Merck one is at the September 90. Yeah, I might go to the 85. Okay, that might come up in this list too, but it's not, wasn't 3% out of the money to start with. Okay, so that's what we're kind of looking at here. This is, to answer your question, Don, just that. If that's my trading plan, this is setting up the output of possible trades that match my trading plan. For this approach, 1 to 2 week out, weekly covered calls, minimum downside protection and percent return if assigned, some range out of the money. We didn't see any that matched, so there were none that matched today. But we were also looking for stocks in an uptrend, which might be difficult because of the last trading week and the last few days of this trading cycle. And then, of course, we input that we wanted some regular volume and then just the dividend growth that we wanted, and of course, earnings per share growth and price range. Okay, so if I'm looking for weekly credit spreads, I can just go into the search for bull put credits. And my trading plan is to look for positions with at least a minimum 12% return, 7 to 14 days out in time with an 85% probability or higher. That's part of my trading plan. I want to see positions that match that. So naturally, you've probably heard me talk about this too much already, Don, but that's my default go-to search for this strategy. I'm going to go to the weekly bull puts, looking for 8 to 17 days out in time, minimum 9% return, 85% probability, with a positive MACD signal, stock in an uptrend, no earnings between now and expiration. And I've got 4 that are currently above my minimum 12%. Why am I looking for greater than 9% if my target was 12 or my target's 15? Simply because if they're in a time frame where volatility starts to move lower, I know that I'm not going to see as many as I want. I might take a 12, an 11, and a 9 just to still start meeting my goals during that trading cycle, if I still like that as well. Okay, so same thing with a calendar spread. What are your goals for calendar spreads? Learn to input, and I don't say learn, you can always call me, you can call Ernie, we can talk it over. Input your criteria. Now, something we're working on in the background, I've started to scope out different ideas and concepts on a follow-up to that. Right now, those rollout opportunities we saw for MSFT and that we saw for Twilio are based on our hard program default criteria that an investor would commonly look for rolling a covered call, rolling a credit spread, rolling a calendar spread, rolling a long call. 1 or 2 ways to manage a long call by creating a calendar from the long call or long put, or rolling it up to maximize the profit and take profit in those cases. Right now, those rollout opportunities, as I mentioned, are hard-coded based on what we would look for, what makes sense, looking for an increase in positive return, although yes, you can roll for a debit in these strategies. You wouldn't roll for a debit if you're rolling a credit spread or turning a credit spread into an iron condor, of course. But yes, if your goal was different, that you just wanted to roll for a credit, Don, you could scroll down here and see those. What we're working on in the background is, perhaps there's no time frame on this. It's this tool, the programming in this tool is intense. It really is. So in the background there, I've been working with the programmers to come up with ideas of where you could input which rollouts you want to see based on if you specifically want to roll for a credit and what you want to see as well, as far as increased premium, increased return, so that you can customize that for your needs when you go into the rollout. That's a ways away, but it is something I'm curious in implementing, and I'd love to implement there so we can program in, you can program in sort of your own ones in that case as well. All right, so Don, that's what we have there as far as the trading plan. That's what the search tool is, inputting criteria for your specific trading plan and a given strategy, so you're only seeing the trades that match your personal goals. Setting the alerts in the portfolio to trigger when you would look to roll a position, adjust a position, or manage a position as well. And then you can use the rollout opportunities and scroll through just as I showed you to see if I had to roll for a credit, where does that start? We saw it started in November with the out of the money option, so I don't think that's a good play for a covered call position. I'd rather maybe roll for a debit 2 to 3 weeks out, maybe 4 weeks out with a lower debit, but not go 90 days out just for the force to roll for a credit. Or I may just take assignment on Microsoft in that case, get the 3% return, and use my search tool on Monday to find new positions that match my trading plan that we just reviewed.